Welcome, dear traders. On a Monday, the US stock indexes closed in the red after a beyond rise last Friday. However, in today's Asian session, they managed to climb again ahead of the Fed meeting. Stock markets in Japan and Australia advanced as well, despite a drop on Wall Street yesterday. The Fed meeting is one of the most crucial events this week. The key rate decision, as well as a Jerome Powell speech, will either fuel a further rally in the stock market or put an end to it. Stocks may also retreat but avoid a downtrend. Investors are mainly focused on the Fed officials' remarks about future monetary policy prospects. Prior to the December meeting, the two non-farm payrolls and inflation reports for November and December will be released. It's hard to foresee the indicators, so Jerome Powell is unlikely to make clear predictions for December. The long-awaited Fed meeting will be held tomorrow. Traders have already priced in a 75 basis point rate hike. However, some investors are betting on a smaller rate increase. Opinions on the size of the rate hike at the next meetings are polarized. Analysts show about a 75 basis point rate increase at the November meeting. However, they are casting doubt that the regulator will undertake such an aggressive hike in December. According to the FedsWatch Tool, the number of those is slightly higher than the number of hikes. The US dollar, which has been rallying for a long time amid aggressive tightening, had to slide into the sideways range. Yet it managed to add gains thanks to an overnight drop on Wall Street. However, it lost momentum again as the US stock futures and the Asian shares resumed growth. Another bearish factor is the fallen US Treasuries. The greenback is also down because of the risk-on sentiment, rising commodity currencies, and expectations of a softer stance. On early Tuesday, it declined even more, trading at 111. In the Asian session, the US dollar index was fluctuating around 120 in the intraday range of 110.83 and 111.57. Given the persistently high inflation, the outlook for the US dollar remains bullish amid expectations of a further aggressive tightening. However, the slightest dovish hints will return bearish pressure on the US dollar. The Bank of Japan remains strongly committed to monetary loosening. Haruhiko Kuroda said that the regulator would continue to adhere to a soft stance to support the economy after the pandemic crisis, ensure price stability, and to boost wage growth. Finance Minister Shinichi Suzuki stressed that Japan would continue to closely monitor the yen moves and intervene when necessary. Yesterday, the Japanese government disclosed how much it spent on interventions to prop up the yen. In September, the amount totaled $19 billion in the 4 weeks of October, and Japan spent a record $42 billion on a currency intervention. As a reminder, on October 21, the yen slumped to a 32-year low and traded near 152. The Bank of Japan carried out interventions because of the currency speculations. Following the comments of policymakers on the weakening of the US dollar, the dollar-yen pair entered the downward channel of 147.47 and 148.83. On a Tuesday morning, the pair was able to climb to 147.69. The Aussie also managed to rise. However, today it dipped to lows after the Reserve Bank of Australia meeting. As expected, the Reserve Bank of Australia raised the interest rate by 25 basis points. The central bank decided to undertake a smaller rate increase despite soaring consumer prices in the country. The RBA also said that inflation is now expected to peak around 8% later this year, up from a previous forecast of 7.75%. And for this reason, the Australian dollar is likely to drop as the Fed will raise the interest rate more aggressively. And today, it's up mostly amid a decline in the greenback, rising commodity currencies and increased risk appetite. The AUD-USD pair is still moving in the upward range of 0.6391 and 0.6450. It approached the level of 0.6433. And that's all for now. Thanks for watching, and you're welcome to leave your comments down below. Stay tuned and keep close tabs on the market developments, and see you soon.